in review, we've got some vocabulary terms. I want to just go over briefly. First of all, we have absorption costing, which is a costing method that includes all manufacturing costs, direct materials, direct labor, and both variable and fixed manufacturing overhead in the cost of a product. Remember that job order costing, we use it when there's different products. Each job or product is somewhat unique, and therefore it's worthy of tracking. Well, that absorption costing, which is the only type of costing you're really aware of at this point, is a costing method that includes all manufacturing costs. Allocation basis, it's a measure of activity, like direct labor hours or machine hours, that we use to assign costs to cost objects, okay? So it's the denominator when you are computing your predetermined overhead rate. And of course, the predetermined overhead rate is the rate that we use to charge MO. Okay, MO to jobs. When we're going to establish that in advance for each period. So we're going to compute that by taking, remember, the estimate divided by the estimated total, total amount of the allocation base. More vocabulary. When we talk about overhead application, that's the process of assigning overhead costs to our specific jobs. So we're taking that predetermined overhead rate, which was estimated by divided by an estimate, but then we're multiplying it by the actual amount of allocation base incurred by that job. That's the part that I missed in your homework, okay? But then we have normal costing, which is a costing system in which overhead costs are applied to a job by multiplying a predetermined overhead rate by the actual amount of allocation base incurred in the job. So I think that's what we are doing. I just don't know that we had put a term to that yet. So normal costing is what we've been doing. We want to get more in depth at understanding the flow of cost in a job order costing system and be able to prepare the appropriate journal entries that go with that. So the T accounts, where if you like them, the T accounts, we were gonna watch them. So you need to be a little bit comfortable with that in order to understand the flow of the job order costing system. So as you guys know, we've got 3 different types of inventory. Now we have the raw materials inventory. So that's the materials that go into the final product. Then we have the WIP, the inventory, which consists of units of production that are only partially complete and require further work before they are ready for sale to customers. WIP is where we add in our raw materials and our direct labor and our MO. Okay, so raw materials, it's just raw material. The WIP, we add the direct labor, direct materials, and MO. Remember that? So it's where everything gets gathered, and then once the product is finished, it moves into finished goods inventory, so that our completed units of product that have not been sold to customers, so it's still inventory. And then a new term that I add up in there, it's cost of goods manufactured. It includes cost of goods manufacturing, the manufacturing costs associated with the goods that were finished during the period. And that's an important one, the goods that were finished during the period, not necessarily the ones that started and finished, but anything that was finished during the period. We're going to continue to talk about cost of goods manufactured, or what we will call it's COGM, the abbreviation. Remember that there we have COGS. This is COGM. So overview, we've got our product cost and the raw materials right in here. Yep, in this at the beginning. Direct labor and MO. And then we have our period cost. Remember also period costs? So raw materials, direct labor, MO, and period cost. So our raw materials start as raw materials as inventory on the balance sheet. And they get requisitioned into a particular job. How? With the job order sheet. And they move into the WIP. And then we add in our direct labor and our MO also into WIP inventory. And then when it's done, we're done working on that product, it goes from WIP into finished goods inventory. There is a little note here where it says goods completed, cost of goods manufactured. That's a really important and great reminder for us that the transfer from WIP to finished goods, that amount represents COGMAN. Okay, COGMAN. That's our cost of goods manufactured. Those are the goods that were finished during the period. Okay, guys. Once it's seated in the finished goods inventory, and then once we sell it, then it moves to cost of goods sold, the expense on the income statement. And in the contrast down here in the bottom with the period costs, we have our period cost and selling in the admin cost. That's where all of our non-manufacturing costs would go. And those just get expensed directly in the period in which they are incurred. Remember? So period cost gets expensed in the period in which they are incurred. Notice that they don't take a stop on the balance sheet. They happen and we expense them, okay? So we're going to take a look at this example with Roger Corporation. So we've got Ruger Corporation, a transaction for the month of April. They are producer of gold and silver commemorative medallions, and they only work on 2 jobs. In April, conveniently, job A and job B. So job A has a special minting of 1,000 gold medallions commemorating the invention of motion pictures. That was starting during March and completed in April. As of March 31st, job A has been assigned 30,000 in manufacturing costs, which corresponds with Ruger's WIP work in process balance on April 1st of 30,000. All of which belongs to job A, okay? And we have job B in order for 10,000 silver medallions commemorating the fall of Berlin Wall or the Empire. Then we was started in April and was incomplete at the end of the month. So job B, it's still going to be in working process because it is incomplete. So let's take the first step is to purchase the raw materials, right? So in our raw materials account, T account, forget if it's a journal entry or T account, you know that it's the same. When we purchase the raw materials, that creates a, we will be requisitioning, well, the first step is to purchase the material, right? We have the debit. Debit with credit into what?
Inventory.
Inventory is a, in the balance sheet is a, what element?
Asset.
Okay, it's an asset because it's an inventory, it's an asset, probably current asset. It's very usual and common to be a current asset. The most common, hopefully. But the credit size, if I debit inventory, material purchases, raw material, what's the credit? The If I debit raw materials, what is the credit part?
Bank account or cash because you're buying something.
Probably suppliers if you're in a manufacturing aspect. So then we are going to requisition materials for work in process. Okay. Because we're going to requisition that into our jobs. So direct materials are going to go into WIP, and then indirect materials go into MO. Remember, the MO acts like an asset for debits and credits in terms of our journal entries and T accounts. But remember that the MO bucket doesn't actually exist on any financial statement. So it acts like an asset. It's what we where we gather all these costs, but at the end of the period we have to dump it out. So the debit side represents our actual costs, and then the credit side is going to represent what we apply into our jobs. Okay, guys? So that's the first register. I didn't put you the register because I want you to tell me how it's been recorded, the purchase of raw materials in journal entry from on April 1, Roger Corporation had 7,000 in raw materials on hand. During the month, the company purchased on account an additional 60,000 in raw materials. Who can tell me what's the register for that?
Perhaps credit, bank account, well, suppliers, and debit your inventory.
For how much?
For 60,000.
Excellent. Correct. Very good. So during April, materials requisition forms were prepared to authorize withdrawing 52,000 in raw materials from the storeroom for use in production. These raw materials included 50,000 of direct and 2,000 of indirect materials. So entry records using the materials of the production department. So first thing is raw materials. We have to credit them, no? As I showed you in the T accounts, you have to credit the raw materials to diminish your inventory from raw materials and move them to work in process. But the problem is that we have indirect materials in there. The problem says that there are raw materials included of 50,000, which is work in process, and the indirect materials go in MO. Okay. That's the only specification that we need to follow. So that will give you the 52,000 as the credit side of the raw materials. Okay, guys. So when we record our labor, what do you see? What are you watching in there? What's the important aspect in there? What is salaries and wages payable? What you can do from an accounting perspective is, since the beginning of the month, even if you didn't pay them, you can create an accrual, right? You expense them and put it as a liability, and when you pay it, you just record the credit transaction from the bank and debit this liability, and you cancel that out. Okay. That's the only difference from just recording it in a expense account directly. Okay, this is how it's been done. Actually, not you don't expense right out when you pay the payroll. All the manufacturing companies and most of the good service companies first create this accrual, this provision, and unlike traditional financial accounting, we don't just expense. So because these are manufacturing costs, they become part of our product cost. So direct labor is going to be a debit into WIP going into each job. So we have a credit into salaries and wages payable, and then our indirect labor is going to create a debit to MO. again, a credit to salaries and wages payable, and we'll make sure we pay those workers when they are due on payday. But for now, it's just set as a liability and salaries and wages payable. Okay. So looking at the Rigor Corporation, the employee time tickets, which provide hourly summaries of each employee's activities, included 60,000 recorded for direct labor and 50,000 for indirect labor. The following entry summarizes these costs. So what do you think it's the recording entry? Who can tell me?
Is it salaries and wages payable?
Salaries and wages would be what part? The debit part of the credit part?
Credit.
Why the credit? Remember, this is a liability. The nature of accounts, guys. Liabilities goes on the credit side. And then what do we debit? And how much? Okay, we credit salaries and wages payable for 75,000. How you balance out your entry? What will you debit?
You credit both, but then you in work in progress you debit direct labor, and in the other one you debit the indirect labor.
MO. In the other it's MO. Okay. So now you have WIP with direct and indirect materials and direct and indirect labor. Okay. So the next part is to assign our manufacturing overhead. Okay, because those are accumulated, the indirect materials and indirect labor are accumulated in MO, and then we have to think about the other overhead. So lots of other things are going into this MO bucket. Remember that? Remember that MO also has utilities, rent and factory equipment, miscellaneous of factory overhead costs. Assume that Roger Corporation incurred the following general factory costs, which are the utilities, rent on factory. What is the register, guys, for this? Debit MO, excellent, and credit. Let's leave it as accounts payable. Okay, great, excellent. So all of these costs, the 21, the 26, the 16, and the 3,000 will be added up in the MO. So now we have a balance of MO, and we have to debit the WIP and then credit the MO, bringing the balance down on the MO account. Remember at the year end, we want the balance and MO to equal exactly 0. So if actual and applied manufacturing, remember that you don't have MO in the balance sheet, okay? It's this account, as we saw, it's kind of with the salaries payable. It's called bridge account. It's a very usual thing to hear about bridge accounts, but that only means that it fulfills a purpose of just administrating some records, but the balance at the end of all bridge accounts, it's 0. So if you review a trial balance from an accounting system and you know that there is an account that it's supposed to be a bridge account and it has a balance, you need to ask why to your accountant. It happens, guys, it happens. What do you think that it happened if you have a balance in salaries payable at the end of the month? If you have a balance in salaries payable, you probably didn't pay somebody, right? So we will apply manufacturing overhead are not equal at the end of the year, adjusted is required, and adjustment is required. And newsflash, they will almost never be equal. Remember, we are applying MO based on the POR, and the POR is computed by taking an estimated divided by an estimate. So the likelihood of us being a spot and MO just working out to zero is really minimal. Highly unlikely that would happen. So we need to plan on examining MO at the end of the year and figuring out if we need to make that year-end adjustment. Okay, guys? How you will do that year-end of adjustment? Probably you need to figure out if you will move it to COGS or if it's okay to have a balance. The most common thing is to move it to COGS at the end of the year, okay? Assume that Ruger Corporation, the predetermined overhead rate is $6 per machine hour. Also, assume that during April, 10,000 machine hours were worked on job A and 5,000 machine hours were worked on job B. So that's a total of 15,000 machine hours. So that makes 90,000 in MO. So we're going to take $6 per machine hour times 15,000 equals 90,000. So that's where the 90,000 is coming from. And we're going to apply that from MO into WIP. So can anybody tell me what's the register? MO into WIP. Credit MO and debit WIP. That's it, guys. That's it. Now we're going to WIP on the balance sheet. So they just get expense in the period incurred. So salary expense of employees who work in marketing, selling, or admin capacity get expense during the period. And then advertising expense just get expense during the period. So they'll show us what that should look like. Here are the records, nothing to tell you in here. The salaries expense, now it gets debit and a credit to salaries and wages, payable. That's how it gets done. And then we have depreciation, very easy. It's just an expense of 7,000 with a contra asset account. Remember what is a contra asset account? That accumulated depreciation, it's a contra asset account. What does that mean? The nature, it's a credit, but it's not presented as a liability. It's presented in the asset, but with credit nature. So it will appear with negative sign, diminishing the amount of assets. Okay. Because remember that depreciation, it's tended to diminish the value, the book value of the asset, because it will be, the assets diminish their value with time. Like the building. The building that won't be valued the same as when you buy it. It has a depreciation. So we have also advertising was 42,000 and other selling administrative expenses in April, total 8,000. So we debit advertising and we debit other selling and ad expense, and we credit accounts payable. So transferring completed jobs from work in process to finished goods. So that dollar amount that we're transferring, that is our COGMAN, that is our cost of goods manufactured. So when we finish job A, it's going to move from WIP over to finished goods. So we debit to finished goods and a credit to WIP, okay? So job A was completed during April and job B was incomplete at the end of the month. Thus, the following entry transfers the cost of job A from WIP to finished goods. The final record. Because job B was not completed by the end of the month, its assigned cost will remain in WIP and carry over the next month. If a balance sheet were prepared at the end of the cost, at the end of April, the cost accumulated thus far on job B, 72,000 would appear in the asset account WIP. WIP is an asset account in the inventory part. At the end of in the financial statement, it will appear only as a line inventory, but you have notes per each account. So when you review the notes, you will have to tell the reader that you have this amount for raw material, this amount for finished goods, and this amount of WIP. Okay. The last part is when it gets sold, you expense on the income statement the cost of goods sold. Okay. So let's see what that looks like. That's the sales entry. The sales entry. We will assume 750 of the 1,000 gold medallions in job A shipped to customer by the end of the month for total sales revenue of 225,000 because 1,000 units were reproduced and the total cost of the job cost sheet was 158,000. The unit product cost was 158. What is the journal entry? Account receivable, debit, guys, sales, credit, and obviously you already have your cost of goods sold, which is 118,500. Well, and you credit the finished goods.